Welcome to PlotLines, where we'll use our over 30 years of experience in real estate communications to uncover the real stories behind real estate. I'm Heather Crowell.
And I'm Britni Acriveau. Dive in with us as we invite guests to break down the ever-changing landscapes of real estate together. Welcome back to PlotLines, a podcast all about rewriting headlines in the real estate space. We're joined today by Todd Newpher, the Mortgage Originator Manager for PSECU, and that's Pennsylvania State Employees Credit Union. Todd, thanks so much for joining us today.
Sure. Thanks for the opportunity to get to meet with you guys and get to talk about credit unions and mortgages and all kinds of fun stuff.
Yeah, we're excited. We actually haven't had a credit union or a bank, so it'll be nice to have that perspective. But why don't we kick things off? Tell us about yourself, your background, and more about PSECU.
Yeah. Sure. I'm married for 2 years, have a 19-year-old son who is in his first year at Drexel University, going for music production.
Oh, very nice.
Looking to make it big in the music industry, and he's very close to that happening, working on his second album that will be signing with a record label to get out there. So
that's awesome.
First quarter next year, so very excited about that. I've been working in the banking industry for about 25 years now. Okay. Most of that, 23 years of that, was in the retail banking world, not the credit union world.
Okay.
Made the change to the credit union world 2.5 years ago. And sorry, I did not make that move sooner. Just a completely different brand of banking, and just culture-wise, engagement-wise, very different. So
Interesting.
And tell us more about PSECU for any of our listeners who may not be familiar.
Yeah, sure. PSECU was founded in 1934 by 22 state employees who started the bank with, I think it was like $27.
Wow.
And their mission, at the time, interest rates were really high. You weren't making a lot of money, and so they decided by pooling their money together, they could create better lives for the bigger group. And so to this day, we still live that mission. But now, today, here in 2024, we're $8.5 billion in assets. Wow. We have over 570,000 members.
Wow.
So it's really quite an incredible story. And, it's people helping people. That's the credit union mission. And, we live it and we breathe it and we eat it every single day here at PSECU.
Love it. Love it. So, so let's shift gears a little bit to where you are now in the mortgage world, on behalf of a credit union. The podcast is about rewriting headlines, right? So first we dig into the current headlines and we get your take. So, tell us about it. Like right now we're seeing things from mortgage rates are going to stabilize following the election to the housing market is shifting. Power is quickly turning in favor of homebuyers, where we all know it was in, the seller's favor for a long time. So what are you seeing? What's the reality? Help us, understand the truth behind these headlines.
Yeah, sure. So, there's a lot in there to talk about.
Yeah.
So,
Lots to unravel.
That's why we're here.
I don't know how much time we have, but I'll try and keep it short and sweet. So look, rates have kind of stabilized. The 30 year has been fluctuating at that 6.875, 7% range. Right after the election, there were fears and concerns that we could see, interest rates spike back up and closer to that 8% range. The whole thinking behind that was we're going to have a new administration coming in. There's going to be a lot of increased government spending, which would not be favorable to the bond markets.
Right.
And that could drive rates up. We haven't seen that happen yet.
Okay.
But really the bigger concern is really inflation.
Yeah.
It's not necessarily interest rates that are making housing and home buying more expensive. It's inflation.
Right.
Shelter and housing is the highest core contributor to inflation. Here in Pennsylvania, since the start of COVID, home prices have surged by about 38%, with the median list price being about $325,000. That's here in Pennsylvania. But again, it's all about location. Where are you at?
Right.
So, for example, out in the Pittsburgh area, they've only seen about a 16.3% increase. Get into the Philadelphia, Camden, Wilmington markets, it's about a 30% increase.
Right.
Harrisburg, Carlisle, which is the area that I'm in, it's about a 43%
Wow.
increase. And then you get into that Allentown, Bethlehem area, it's about 57%.
Wow.
And then Scranton, Wilkes-Barre, they've seen like about a 67%. But take a guess where the highest increase has been. I'll give you a little bit of a hint. City is in the name, and it's in the western part of the state.
City is in the name.
Yeah.
Western part of the state. I don't know why it's not coming to me.
Okay.
You give it to
Well,
us.
Oil City, Pennsylvania. Oil City, Pennsylvania, 125% increase
Oh, wow.
Wow.
in the
Wow.
median list price. So they went from 90,000 to 203,000.
Yeah.
So when you see that, really the issue is affordable housing.
Yeah.
Right.
It's just not there.
Right.
And that's really, that's really the problem. But how do we get around that? In terms of interest rates, the 30-year fixed, like I said, it's been hovering between 6.75 and 7%, the last couple of weeks. Per Freddie Mac, since 1971, the average for a 30-year fixed rate is 7.37%. So we're well below that.
That's right.
We're really in the normal zone for interest rates right now.
Right.
It's
Okay.
just not normal compared to the last couple of years,
Right.
which was extremely abnormal. And we
Right.
probably won't see that again.
Yeah. Yeah.
At least not in my lifetime, because I'm a pretty old guy. So, so I don't think I'll see it again. So rates aren't bad. They're average. They're below average. The big question is, where are rates going to go in 2025?
Right. Yeah.
And so, the big story there is going to be government spending. If we see a large increase in government spending, what we're probably going to run into, you have what's called bond pirates out there. And these are investors in the bond market. And when they disagree with government spending, they will sell bonds. And when you sell bonds, rates go up when you do it in large quantities. And so that's kind of their signal to say, look, we don't agree with government spending, and we need you to curtail it. And by doing that, we're going to sell our bonds, and we're going to spike interest rates, which makes it more expensive for the government to borrow money as well.
Right.
So when that happens, rates spike very quickly. So, I think that's a concern in 2025. But, there's 6 real hazards for 2025. So one is debt, government spending, government debt, some of the programs that we're hearing, that the new administration wants to put in place are very, very expensive and could quickly, increase the debt by $5 trillion very, very quickly. That would not be good. That's where your bond pirates start to sell.
Right.
Oil is a concern. Oil prices are low right now. And if you actually want to get a good feel for what the 30-year fixed rate may do, there's a direct correlation between the price of oil and the 30-year fixed rate. They have mirrored each other perfectly over the last 3 years, other than since September. Oil has continued to come down where rates are kind of going up.
Right.
But there's no real reason for oil prices to increase, especially if we increase production, which is expected to happen with the new administration.
Yeah.
They're gonna pump, baby, pump. And so if that continues to bring oil prices down, we should absolutely see mortgage rates come down.
Okay.
So
So I think, rates being one thing, but you talked about home prices being elevated, right?
Yeah.
And it's rare for, I feel like, that to go in the other direction. But like the standpoint of a credit union or even like banking products, what are there products out there that home buyers can use to ease some of that? Like how can we bridge that gap without being able to control interest rates, right? And there's a lot, as you pointed out, there's a lot at play there, but maybe they are more reasonable than they have been for the past year or so, and more in line with history than they were 5 years ago. What can we do, or what can we expect on the home value side, and what can home buyers do to ease that burden?
yeah, the challenge is certainly going to be, the purchase prices. Don't see them coming down
Right.
Yeah.
because there's just such a lack of inventory.
Yep.
That's not getting any better right now. And there is extremely high demand for people wanting to buy.
Yeah.
For example, we take in 300 to 400 applications a month. People looking to get pre-qualified for a mortgage to purchase a home.
Okay.
So people want to buy. There's just nothing to buy. So that's going to be the challenge with prices. Don't really see that changing much. Here's the advantage to credit unions. We can do some things that retail banks can't do.
Okay.
So credit unions are always typically a better place to go to get a better interest rate.
Okay.
And
It
because
was my
our
introduction to credit unions was through my home mortgage.
there you go. Well, we like to always tell the story that, we were your first credit card, we were your first auto loan, and now we were your first mortgage.
Right.
Yeah.
So it's a lifelong story being with the credit union, which is what we love.
Yep.
But credit unions can do some things that banks can't. We can have, more unique products. We're always typically more competitive on interest rates. Again,
Okay.
PSECU is a not-for-profit credit union, and that means we can charge less fees and provide better rates, and that's going to help, the home buyer save money. For example, we only charge a $550 origination fee, whether you're doing a $200,000 loan or you're doing a $2.5 million.
Wow.
Well, that's pretty much unheard of out there in the mortgage industry. One of our really, really great products that we rolled out about a year and a half ago is our first-time homebuyer program, where they can do 100% financing. There's no PMI on the mortgage payment. We don't have an income cap, where banks do have income caps on the first-time homebuyer program. So we don't have that. So that's a great program for first-time home buyers. And we do probably about 27% of our overall business is first-time home buyers in that product. So,
And you offer other resources for first-time home buyers too, right? Like things like financial literacy, and I mean, it's such a daunting process that first time you're buying a home. Tell us a little bit more about that as well.
yeah, if you're an originator, your favorite customer is a first-time home buyer. Because you really get to educate them, you really get to walk them through the process, because they need more hand-holding.
Yeah.
You don't know what you don't know, and it's our job to educate them, to make sure they get the best deal that they can, whether that be with us or somebody else.
Sure.
You always want to lead them in the right direction. Most of the time it is us, so that's good. But buying a home for the first time is something you're always going to remember.
Yeah.
And if you're working with an originator that made that experience really special for you, really smooth, got you a great deal, you're going to remember that originator when you
For
go
sure.
to them with your second home. And so that's, again, the whole culture in the credit union market is people helping people. And
Right.
so you got to live that, and you got to want to be able to provide that to all your borrowers, but especially a first-time home buyer.
Yeah, of course.
Yeah. Interesting. So I guess shifting gears a little bit, or shifting gears back to mortgage rates, given the lack of clarity on where they're headed, tell us about the use of adjustable rate mortgages and, relative to fixed rates, and what home buyers should be thinking about in that regard, especially at a time like this.
Sure, absolutely. Adjustable rate ARMs used to be a dirty word, because of, what happened back in '08
Yep.
and '09.
Yep.
Very different environment now. I haven't looked at the numbers in a little while, but I know at one point, 60% of our volume was being done with adjustable rate mortgages.
Okay.
It is a great product when you're in this kind of rate environment.
Right.
So,
Okay.
Waiting for it to go down. Yeah.
you can save 0.5%, 0.75% doing a 7/1 ARM,
Yeah.
where you've got 7 years to bet rates are probably going to come down during that
Yep.
period of time.
Yep.
And I'll be in a good position to be able to refinance and even get a lower rate.
Yeah.
And you really do have to educate people on ARMs because they don't understand them. They only know what they heard.
Right.
And so, again, big education piece, giving them the benefits and giving them the negatives too.
Yep.
What you don't want to find yourself in is, hey, now you're 7 years down, rates really didn't come down,
Right.
or
Right.
maybe they came down a little bit and you want to refinance, but you lost 40% of the value of the home,
Yeah.
and now you don't have the equity to be able to refinance.
Yeah.
Yes.
That's the gamble. That's something that's probably not going to happen. So you're really just thinking shorter term. I would never do anything but an ARM because I'm always hedging rates are going to come down.
Sure.
Okay.
So if I can save myself 0.5%, 0.75% right out of the gate for a couple of years, I'm going to take that.
Yeah.
I'm going to take that. But ARMs are great products with the specific rate borrower.
Okay.
And again, it's all about education.
Yeah.
Okay.
Getting
Yeah.
people comfortable with what they're doing.
All right. Well, in a moment, we're going to ask you to rewrite your own headline, Todd. But I'm curious. We talked about a lot of different layers here to the housing market. Is there anything else you're watching from your seat at PSECU closely? As you mentioned, there's a lot of different factors, but we still have
Predictors of the
and yet we still have this unaffordable housing market. I mean, are there other things that you're watching closely heading into the new year?
Yeah, definitely, looking at what new fiscal policy is going to look like.
Yeah.
Sure.
With the new administration. We still have a lot of sticky inflation. And then you have China. China has a serious issue of deflation.
Okay.
Where wages are down and they have really excessive housing. And so that needs to be a concern that needs to be watched because China is in a serious, serious issue with deflation.
Yeah.
And then global uncertainty. We got a lot of global uncertainty
Yeah.
going on right now. So all things to be looking for in 2025.
Yeah.
All right.
Okay.
Well, with that, then we'll turn it back to you. We started the show with picking your brain about headlines, about mortgage rates, and certainly there's a lot. But so if you had the opportunity to write your own, and what would that look like?
Wow. I was thinking about it all morning and pretty much came up with nothing.
Oh, I'm sure you got something.
But if I had to come up with something, I would say, better rates, people helping people, not rockets.
All right.
So
All right.
All right.
I used to have a poster hanging up in my office that said, "People, not rockets," and showed a rocket crashing into the ground.
Yeah.
So
There you
Oh,
go.
well, I like that.
no,
All right. Well, Todd, we appreciate having you today. Is there
Yeah.
anything else our listeners should know about you or PSECU?
No, if we can ever help anybody, just reach out to us at pseccu.com. We have a mortgage webpage there. We have all of our originators on there that you can meet and contact. And we get back to you as quickly as possible, always within 24 hours. And we look forward to helping anybody that we can, even if it's just a conversation about, best options and,
More people in their homes.
Yep. Yeah, credit union is really, truly, if you're looking for a mortgage, credit unions are really your best option.
Okay.
Awesome.
All right. Well, thanks so much for your time today,
you.
Todd.
No, thank you. It was a pleasure being with you today.
All right.
Thanks so much.
This podcast is a production of Gregory FCA. If you enjoyed our discussion, please subscribe wherever you listen to podcasts